Welcome to InvestorHubX.com. Let's think of a scenario. If sellers are strong enough to push price down 3 days in a row, what does that tell you about control? In this video, we're going to talk about the 3-bar rule. The 3-bar rule is a simple, but powerful, price action concept. When you see 3 consecutive red, daily or weekly candles closing lower, it signals strong bearish momentum. This tells us that sellers are clearly in control, and the downtrend is likely to continue. The key is not just the color of the candles. What matters most is the consecutive lower closes. When price continues to close lower 3 times in a row, it shows sustained pressure from sellers. And the principle is simple: markets move in momentum. When you see 3 strong consecutive lower closes, that is not random. That is pressure, and pressure often leads to continuation. Let's look at a few examples. This is Bitcoin on the weekly time frame. The weekly time frame is more reliable because it represents higher time frame structure and stronger market participation. Now look at these 3 bars right here. Notice something important. The open of each new red candle is right at, or very near, the close of the previous one. That tells us there is no meaningful buying pressure in between. Sellers are maintaining control. And this happened for 3 consecutive weeks in a row. That is sustained selling momentum. What followed after that was a clear downtrend. Here's another example of 3 consecutive red bars. Again, notice the structure. Each candle closes lower than the previous one. There's no strong rejection, no aggressive buyer response. This is sustained selling pressure. And what happens next? A strong downtrend. Here is the weekly Bitcoin chart for 2025 and 2026. Now I want you to train your eyes. Don't look for indicators. Don't look for news. Just look at price. Can you identify 3 consecutive red bars? Good. Now notice something important. The one circled in purple did not lead to a downtrend. So what happened? This is why the 3-bar rule is not 100%. 3 consecutive red bars show momentum, but momentum alone does not guarantee continuation. Markets move on probability, not certainty. In this case, price was approaching a strong, higher time frame support level. Even though sellers were aggressive for 3 weeks, they were selling into demand. And when strong demand absorbs selling pressure, momentum stalls. To summarize, the 3-bar rule shows us momentum. When price closes lower 3 times in a row, sellers are clearly in control, and continuation becomes more likely. But it is not 100%. Momentum without context can fail, especially near strong support or higher time frame structure. Remember, trading is about probability, not certainty. The 3-bar rule gives us an edge when combined with proper analysis. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.